Welcome back to this Moneycontrol live stream. You're watching Closing Bell with me, Nandita Khemka, and my colleague.
Hello there, I'm Yatin Mota.
Well, Yatin, what would you call it? A thunderous Thursday? Tuesday is terrific, but
Thursday is also terrific. When the market is up 300 points, obviously it's terrific.
It is, of course. The party that started yesterday, started in full swing yesterday, although it was a third straight day of gains. But, in true sense, the party started yesterday and it only gained pace today, given the fact that we surged past that 25,550 mark as well today, and of course that was hands down led by the Nifty Bank index. Yatin, that index had hit a fresh lifetime high of 57,250 or so, if I'm not mistaken. So yes, we've hit a fresh all-time high. This was one pocket that wasn't really performing, but today it took off and gave a leg up to the market as well. So yes, 25,500 back on the charts, and a lot of people, happy faces around as well. The broader end of the markets were underperforming today. The mid-cap index, was up somewhere around 0.5% or thereabouts. No fireworks on the small-cap index, which is why the breadth was even. Although it was skewed in favor of gainers. Aside of banks, metals were shining bright, 2.5% gain on the Nifty Metal Index. Oil and gas as a pocket was also doing well, crude around that sub $69 levels, boding well. So oil and gas was another pocket that did well. What was sitting out from today's up move were the likes of Realty, IT and pharma. All three sectors were under selling pressure today. All three indices ended the day in the red. But just want to point out, we are just about 2.5% away from all-time highs on the Nifty now. So not very far from life highs. And for the June series, both the Nifty and Nifty Bank indices are up somewhere around 3%. Just want to share one historical data point. In the last 10 Julys, we haven't seen a single negative return month, right? So all 10 years or all 10 Julys in the last 10 years have given positive returns. So seasonality factor also in our favor, and tomorrow we start the July series.
Correct.
Let's hope we hit fresh highs once again, and clock that 26,000 mark as well on the Nifty. But in terms of gainers, then very quickly, financials were leading from the front. So you had the likes of Shriram Finance, Jio Finance, all these stocks rallied in excess of 3%. Even Bajaj Finance was up and about. You have others like Tata Steel, Adani Ports. These were among the other movers. On the flip side, again, a losers list was fairly slim today, and that was dominated by the likes of Dr. Reddy's and Tech Mahindra. City's sell call, weighing in on sentiment here. Aside of that, some auto and banking names under pressure, the likes of Hero Moto and Maruti, and even SBI was under a slight pressure. But I think broad end of the markets, although they were quiet, but there were quite a few movers there.
Yeah, so 0.5% plus kind of a gains for the mid-cap indices as well as the small-cap indices. Advance decline ratio healthy at 3:2. If you look at stocks in the Nifty 500, we had stocks like First Cry moving 17% in trade. We had a block deal in MobiKwik, and post the deal, we had a 20% intraday swing. So post the deal, that stock also remained in focus. We also had Raymond's, Nuama, Tube Investments of India, all of these stocks moving anywhere between 5 to 7%. What was not doing well is Endurance, Wockhardt Pharma, as well as EID Perry. All of these stocks saw some bit of profit taking. But clearly, if you look at stocks like Abbott India, Gillette, Dalmia Bharat, Max Healthcare, AU Small Finance Bank in the Nifty Bank, Max Financial, all of these stocks hitting fresh 52-week highs, and so did the Nifty Bank at all-time highs.
Yeah, then I think before stocks, we should discuss the Nifty Bank index, given the fact that it has hit a fresh record high. HDFC Bank also hit a fresh record high, cleared that 2,000 mark. Some other pockets also did well. I want to mention Reliance Industries, Yatin, 2% up. So a lot of these stocks, the index heavyweights stood out, and they were standing like a rock for the index today. But let's talk about the Nifty Bank index.
Yeah, so Nifty Bank at all-time high, and the momentum continues here. And thanks to the Nifty Bank, we have record levels, closing in on a few of these stocks. So now, HDFC Bank and AU Bank, these are the two constituents of the Nifty Bank which have hit all-time highs. In fact, the RBI rate cut as well as the CRR cut has clearly boosted the entire banking sector. And ever since that RBI policy, we have seen a continuous spike up for the Nifty Bank. In fact, if you look at year to date, which is the current 2025, we have Nifty Bank, which is the top sectoral index. It has gained nearly 12%, beg your pardon, for the period year to date. And if you look at HDFC Bank, obviously the trigger here are their liquidity has been improving. rate cuts will probably help mobilize higher amount of funds to them. Also, HDB Financial's IPO is currently ongoing, and in the offer for sale, HDFC Bank is expected to garner 10,000 crores, and that will probably add to their liquidity ratio, their CRR, their capital adequacy ratios will move up. So yes, that is also one reason why HDFC Bank shares are in focus. As I mentioned earlier, a 12% year-to-date gain coming in for the Nifty Bank.
Yes, I think market participants were waiting for Nifty Bank to fire up and provide that leg up to the market, Yatin, given the fact that, although the rally started 3 days ago,
yes,
but we were kind of iffy, we were fizzling out, but now decisively we have crossed that 25,500 mark, and perhaps, who knows, 25,800, 700 could be in the offing in the first week of, July itself. But let's talk about some of the other stocks that weren't in favor in an otherwise strong market. That was Dr. Reddy's. The entire pharma pack was actually subdued today. Dr. Reddy's top Nifty laggard, given the fact that Citi has a sell call on this stock, and the target price has been scaled down to 990 rupees from 1040 rupees earlier. They have scaled down their target price by 5%, but from the current levels, this target of 990 implies a 25% downside. Yeah. Not very pretty, and which is why I think the stock reacted. Of course, the brokerage has outlined some challenging outlook for the company going forward. The company was actually banking on semaglutide to bridge that rev limit gap that will come in from January 2026. But Citi has pointed out that a deep dive into the Canadian market showed that the GLP-1 market, the demand may not be all that great, which is why I think investor expectations are actually too optimistic, and they may have to be tempered down. So this is one point that Citi had mentioned, and that could be a pain point in future. Aside of that, timely regulatory approvals will be of importance, given the fact that Dr. Reddy's has a mixed track record when it comes to its complex filings. Of course, we have that rev limit factor, falling sales along with related product, PLI, production linked incentives, could hit the company's EBITDA by $750 to $780 million, and that gap, that EBITDA loss will be very difficult to bridge, according to Citi. But they've also pointed out that the supply of remaining quantity of Revlimid could provide some support to the earnings for the next 2 quarters. But beyond that, the outlook looks clouded right now, because semaglutide, I beg your pardon, was the one drug, GLP-1, that Dr. Reddy's was banking on to bridge that Revlimid gap, but looks like that is something that street was being too optimistic about, and that expectation has to be scaled down. So yes, we'll have to wait and watch as to how Dr. Reddy's will actually go ahead and plug that Revlimid gap, and how really the semaglutide market really turns out in Canada. Yatin.
So I think in the pharma space, yes, a lot of clarity is still required, because we also have Trump, which is time and again said that he'll levy tariffs on pharmaceutical products. Whether or not Indian companies get impacted, that's a separate question. But yes, all of these news do impact the pharma stocks in some way or the other.
That's true. Never seen before kind of tariffs. If that comes by, and of course we also have regulatory concerns, right? A lot of these surprise inspections happening, yes. And that has also kept a lid on pharma shares. But from pharma to aviation, I think aviation has also garnered a lot of attention in recent times, Yatin, given the Middle East conflict, our border conflict with Pakistan as well. But notwithstanding that, there's some good news around Indigo, which is why the stock was up somewhere around 2-3%. I think it was up for a 5th straight session today. There was a trigger. B&K Securities has initiated coverage on the stock with a buy rating. Target price is at 7,256 rupees per share, which implies a 30% upside. And I think this is the first target above 7,000 rupees on Indigo. So yes, but aside of that, B&K Securities has mentioned that the company has been performing consistently on time, as well as minimal customer complaints. So these are some of the factors that's leading to strong operational efficiency for the company. India, according to B&K Securities, remains a very highly under-penetrated air travel market, and demand supply imbalance is also there due to the ongoing aircraft supply constraints, which should support fares and profitability in turn for the airline going forward. Now, aircraft supply constraints will ensure that demand outstrips the supply. And of course, aside of that, Indigo has a very consumer-centric approach, and cost leadership-wise, also, it has been fairly strong. So these are some of the key strengths highlighted by B&K Securities. They are building in an EBITDA PAT CAGR, compounded annual growth rate, of 20% and 22% over FY25 to FY27, and they've also mentioned that stock is trading at 20 times FY27 earnings per share.
Yeah.
Stock is up 24% on a YTD basis, and it's close to record highs. But of course, the stock has seen quite a few developments in the last 1 month. There's been the promoter stake sale by Gangwal family. They still have a near 8% stake, and that will be diluted. But there were reports like that parent Indigo Enterprises will be pairing selling some stake to raise $1 billion. But that didn't happen. They have denied that. I think, which is why the stocks did see a knee-jerk reaction, but then it recovered pretty smartly as well. But yes, Indigo, for now, a good price target of in excess of 7,000 bodes well, and the stock, of course, has been doing well, gaining for the 5th straight session today.
Absolutely, and Indigo, what a phenomenal run this stock has given. In fact, I was reading a few quant analyst notes, and Indigo is the one which can be possibly included in the Nifty in the upcoming review. I think the review happens in August, so the announcement probably will happen somewhere in August, and the review or the rebalancing happens in September. So this is a semi-annual Nifty rebalancing. Probable high, probably candidate is Indigo.
Flying its way to the top on the Nifty. That inclusion, of course, that's also something to track. But of course, with that, those were all the stocks that were on our radar this afternoon. A very good day of trade. Let's see how the July series, kick starts tomorrow. Whether or not we make a dash at 25,600, 700 tomorrow itself, that's something we'll discover tomorrow itself. But with that, completely out of time on closing bell. Thank you for tuning in and watching us. But stay tuned to Money Control for all your other news and updates, and I'll catch you tomorrow morning, Friday at 9 a.m.